No nation is an island, certainly not Australia, but relatively speaking, it has been a different narrative here for equities in particular as of late. Why?
I think a lot of that has got to do with some of the sort of inflationary discussions that you've seen, and given that there's still a substantial part of the economy which is tied into sort of commodities, and historically those are seen as weathering sort of inflationary pressures better than other parts of the equity market. I think that that's been a key part of the sort of narrative here locally.
Okay, but we have had a major shift coming from at least one of the big banks this morning, Bill Evans, Westpac chief economist, saying that the interest rate hike here will likely happen in June, the first of more to come. What do you think about that, John?
So I think the markets have already been discounting that rates will rise. Whether or not it's in June or it's a little bit later than that is, I think, less of an issue. That you are starting to see the interest rate regime here in Australia change as it is going to change in the United States. You've obviously got inflationary pressures which are seeing that they're just being more permanent than I think an awful lot of people either expected or hoped that they would be. The supply chain disruptions that we've seen have been a lot more elongated than many had expected. And then obviously you've got the unfolding crisis and in the Ukraine, which is being highly disruptive, not just to energy, but also to some basic feedstocks or food stocks in Europe as well. And so I think that those sort of challenges coming through are just going to mean that the sort of inflationary pressures that we've seen building may well last a lot longer, and so central banks are going to have to start responding to that.